often make mistakes to identify the trend, and the more mistakes are made when the markets are sideways. When the market is sideways, we lose more money in options because the markets are not going anywhere. So this was the special case where the market was in a range bound, it was trading in a downward channel, and it was very slow, volatility was missing. So that made me think to create a video. We had conducted poll on this and we got good response. So in this video, we'll learn about the sideways market, how to identify them, what are the patterns that get formed during the sideways market, and what is the indicators that I'm using to identify the sideways market, what option strategies you can adopt, or what are the future and option strategies that you can adopt during the sideways market, and how to trade the sideways market. So all these things we'll discuss in this video. So stay tuned, and you can watch this video with 1.2x speed. And yeah, stay till the end because this will be very informative video. You will be able to understand a lot of stuff from this. Here we are looking back on the charts. This has already happened in the past. So you might say that it is already happened. So it is very easy to design strategies and all. But yeah, what we want to do is we want to look back past charts and we want to be future ready. So if such opportunities or if such markets happen in the future, we will be ready with our set of strategies. So that's what we will be covering in this video. So let's talk about this particular area on daily time frame. So now we'll look at the different patterns that get formed during the sideways market. So this is one pattern. So here you can see almost 5 to 6 sessions the Nifty was trading in sideways. This there were very small candles getting formed. So this pattern is called as inside bar. So here you have first candle, which is mother candle. It is a big candle. Then next candles are formed within the body of the first candle. So within the high and low of this first candle, the next candle gets formed. So this is called as inside bar pattern. So this is very common and we see it often. So it was formed during it was formed after the budget announcement. So this was the budget day, right? So this was the budget day candle, and then we have these candles within the body of this candle, right? So this is again inside bar pattern. So we will discuss further in detail how to trade the inside bars, and there are other patterns as well. Like here also again there was one inside bar pattern, and in July 2021 we had this rectangle shaped pattern, right? Here you see the price is trading in a small range that is between 15,900 and on the downside it is 15,600 something, right? So this was the range, 300 points range in which market traded June second half until the July end. So here in Synergin, you can see Synergin stock, you can see triangle getting formed. So this is the third pattern that you need to look for. So in triangle also you get range, and this is daily chart, by the way. It will be very tough for traders to trade this based on options, and you will lose premiums each month. So if you are a long-term trader in the options, then you will have such opportunities, but we have to look for such patterns on hourly chart as well. So I'm just giving you an example here. This is a daily pattern. It will be very tough to trade this because it is trading since 766 days in this range, and it has formed a triangle. So I just wanted to highlight that this is a triangle pattern. So here again a rectangle on larger scale. You can see here in Reliance, since I think it made top somewhere near September 2021, and since then it is trading in range. So this is a kind of rectangle pattern. So similar pattern we have to look for on hourly chart, and then we can trade it on options. So that's the three pattern that I wanted to talk on. Next is we will see what is the different indicators that we can use to identify such sideways market. And now here I'll add the indicators. So first indicator that I'm going to add is MACD, and then we'll add exponential moving average, and our Aron indicator is the third one that I use. So here the EMA that you have to use is 13 EMA. Go to the settings, change this value to 13 and click OK. And here MACD will have default values, and on Aron on TradingView it is 14. I prefer to use it 25 because it will give more accurate signals on 25 period. So this is our indicator based setup. How to identify trend based on these indicators, we'll talk about that in the next. So here you can see on this day, what is this date? 17th April 2023, market opened gap down and then recovered by the end of the day, almost 50% it recovered. So you can see on the daily time frame, there is a big tail that is formed. You can see here this big candle got formed. It opened gap down and then made a low here, and then by the end of the day it recovered. So this indicated a weakness. That is the first point, right? So you did not know until this until the close of this candle and the next day candle that this is an inside bar pattern, right? But what clue we get on 15-minute chart here from Aron indicator is this is a sideways market, right? So Aron indicator is specializes in identifying trend properly. So here you can see Aron lines are parallel. So this is red line, which indicates Aron down. This is green line, which indicates Aron up. So when both these lines are parallel, it indicates a sideways trend. So when these values goes below 50, the markets will not go anywhere. It will trade in sideways. It will not break high and low. It will be less volatile. That's what the conclusion we have to make from Aron indicator. When it is at extreme, it will indicate full bullish or full bearish market. Like for example here, so right, this is a bullish Aron indication that lines are at extreme, green line above 70, red line below 30, and then market trended up, right? Similar situation happened here when the market when the Aron indicator went to the extreme. But that's not our the part of this video. We are talking about the sideways market. So here you got the idea that the market went sideways and the Aron lines turned parallel on 15-minute chart, and the lines were below 50 staying parallel. This indicated us that this is a sideways market. Next day it opened within the body of the first candle, okay, and then closed within the body of that first candle, right? So this indicated again that the inside bar pattern is formed. So then we have to switch to hourly time frame, and hourly time frame, it will clearly indicate again that this is a special situation and it's a completely sideways market. The markets are hardly any volatile here. It is going to trade for this for next couple of days. So this is another signal for us on hourly chart on larger time frame that the market will stay in sideways for next couple of days. You can go and look back such situation in the past. So here also after the budget day, you can see here the Aron lines were parallel and it indicated the sideways market. So on next day it turned sideways. In the next day's candle it turned sideways. So this is the candle in the next day. So here you can see the Aron lines were parallel. So this is the indication that the market was sideways for those days. How to trade these markets, right? So here you clearly got the idea that the market is sideways. The red line is above green line. So that indicates sideways to bearish market. Okay. So this will be a opportunity for scalpers to trade on the pullbacks towards 13 EMA. That is the second setup. Okay. And here, let's go to the 15-minute chart. It will be more clear and very easy to understand. So here you can see that. So one time, like on the same day, the price went below 13 EMA, pulled back, closed above 13 EMA. Next day again, pulled back below 13 EMA. Again, 13 EMA touched down, right? Touched down, touched down. Here you can see the pullback is slower, but the down move is little faster. MACD is below zero line. It's always a sell signal. Price pull backs to 13 EMA. Then we have to look for pattern and go look for downside opportunity because the downside trend is little stronger here. So until the second day close, you will not be able to trade it because you will not be able to identify the stop loss will get hit here 1 to 3 times. So this is the third day, right? So yeah, this is what is this day? Yeah. So here the price closes. Okay. So this is third day, or even here you have an opportunity. Here you see a bearish engulfing candle clearly. Then price breaks below 13 EMA. You got a couple of points, 1 or 2 candles. You can stay in the trade. You can exit on a green candle or exit on your defined stop loss or targets 1:1, 1:2. Stop loss will be just above this bearish engulfing candle. Again, here you got hanging man. Then there is inside bar pattern. The inside bar got broken here. You can enter trade here, keeping the stop loss above this, and then ride for 2-3 candles or 1:1 stop loss and risk reward. So this way we can trade. Here you will get the stop loss hit because this is first 15-minute candle. It closed below 13 EMA. And if you try to enter on first 15-minute candle, you know that the stop loss will get hit. So here the idea is price MACD is below zero line, look for the pullbacks and look for the short opportunities. Look for pullback towards 13 EMA and look for short opportunities. Here, Aron indicator help you to identify the trend that it is sideways. And here MACD is telling you that short on pullbacks because the lines are below MACD and signal line are below zero line, right? So you can do that multiple times. Here you got multiple dojis formed, and then you got red candle closing below 13 EMA. Couple of candles you can write for the downside. Here you have a shooting star pattern, right? Here you have shooting star pattern. Then price again breaks below 13 EMA, short it here, stop loss about this. Look for 1:1, 1:2 stop risk reward. So this is the way you can do the scalping for multiple days. How many how many days you can do the scalping until you see the price conveniently closed above 13 EMA and MACD goes above zero line. So here you can see the gap up happened and price convincingly stayed above 13 EMA. It did not break that 13 EMA convincingly. There is no complete bearish candle here, and MACD by this time has already came above zero. So this is the signal that the trend has changed. Even you can see here, you can plot the trend line. So until this trend line was there, this trend line was not broken. The price was making lower high, lower low, right? So this point, by this point, the price opened gap up, broken all these two swing highs that indicated the trend change, right? So here then you have to look for like when the MACD gives the crossover here, right? Here the MACD gave crossover, 2-3 candles made green and they went above 13 EMA, then MACD also green, right? So here you can look for buy opportunity. So this is the trend change. Obviously, we are discussing this after it has happened, but this will help you, definitely help you trading based on indicators, how the pullback works, how the MACD works. So MACD below zero line is sell signal, MACD above zero line is a buy signal. So here we got crossover, price above 13 EMA, go look for buying opportunity. Even Aron turned here completely bullish, you get couple of good opportunities on the upside. So this is how you trade or scalp in a sideways market. So that was a scalping strategy, right? Last part of this video, future and options. So in future and options, they are very risky. And in a sideways market, if you are just buying and holding it for next day, expecting a big move, you will lose the premium. The price will become zero. So here you can see we had hardly 100 and 150 points without holding options. You just scalp it, close it at the end of the day, look for small profits and then close out that day. Don't go for big profits because out of the money options will definitely become zero here. Even the at the money options will lose the premium because of the time decay. And here you should only trade in the money options even if you are doing the scalping. What you can do as an option trader is in inside bar formation, what you can do is you can sell the high and low. 17,863 is a high, okay, and 17,574 is the low. So what you can do is you can sell here 17,850 call. So high of this candle you can sell the call and low of this candle you can sell the put. So the market stayed in sideways. So this happened on Monday, then Tuesday, right? So on this day you will do it because until this day you do not know this is side bar pattern. So on the close of this day you will look to sell out the options of this mother candles high and low. Okay, so this is a downside market. So obviously you will sell call of this high and put of this low. For next 4 days the market stayed in sideways. On that expiry of I think 20th April expiry, you will get the premium. The both of them will become zero, and this is a non-directional strategy. This is called a short strangle. So this was a short strangle strategy. You can read it here when the market is sideways, and this is a non-directional strategy where the market is sideways and you have to, so let's say the market is here, you have to short strike on the equal distance. Okay, so on next day after forming an inside bar pattern, after we got a confirmation, we have to short the strike with the equal distance. Then only this strategy will work. Obviously there will be break-even points and there is a maximum profit and maximum loss for this one. So here you have unlimited loss for this strategy. So do read about this option strategy in detail here. Properly keep a stop loss, otherwise you can be in a big trouble. Then when the reversal happens, right? So how we identified the reversal, I told you, right? On 15-minute chart, MACD went above zero line and then gave crossover. Price stayed above 13 EMA. These two things tell us that market trend has changed and the reversal has started. So what you can do is, if you see couple of green candles here, so again the market will be remaining slow for next couple of days. It is going slow up until this high is broken, right? Until this high is broken, the market will go slowly up. And here you can adopt the strategy called as covered call. So covered call is another strategy for slow markets, slow moving markets. So whether it's going slow up or slow down, depending on that, you have to design the strategy. So covered call, what you do is you buy a future. So you buy a future contract and sell out of the money options. So here we saw that the market is going to trend up. So here we'll take a trade. You here will buy a future contract and sell higher out of the money options. So what options we should trade? Like here, I will sell the call of 17,850. So by the expiry, what was the expiry? Thursday. So on Thursday, it went up, and by the end of the day, it closed above 17,900. So we'll check both. You can enter here at the day end close as well. Okay, if even if you are not sure that trend had changed here, it came down, you are not sure whether to enter here or not, you can enter on the close of this day as well. Okay, so here you will get less profits, but there will be definitely good, at least some profit will be there. Instead of trading, scalping and making that headache, you can still make money by sitting idle, buying the call and selling the option here. So you can read the complete strategy here, but I'll give you small idea how it would have been worked. So on this screen, I have historical data of that monthly expiry of 17,850 call, right? So on this day, 24th, we got reversal. Let's say at the close of the day, you shorted at 24 rupees. So this was a short, call short, right? So if it becomes zero, then only you will get profit. Otherwise, you will be in loss, right? Future, you buy at the close itself. So 17,763 you will buy, right? And here you will short 17,850 call, right? So let's say here you can do two things. You can exit one day before the expiry, and if you are not sure and you don't like the expiry volatility, you can exit one day before the expiry. So here you can see the closing price of that option remained just 1 rupee. It went 1 rupees down and from 17,770 rupees, the price went to 17,820 rupees. So almost 50 points you are getting here. So close to 2,000 profit you will get in 3 days by doing nothing. The market went slowly up. The premium didn't decrease because the price was closing just above 17,000, just near 17,850, and one day was left to the expiry. If you hold it till the end of the expiry, you will get close to, I think, how many points you got here? Almost 150 points you got here, and here you lose 25 points, right? So almost 125 points profit you get. Multiply that with 50, that will be your profit. So this is how the covered call work. Okay, apart from this, if you are learning or if you do the short selling as well, you can visit the concept site, go to the option strategies. Here you have different strategies for markets. So let's say this is oscillate is market is trading in sideways market. Then you have different strategies like this. There are 6 strategies here. In a volatile market, you have 6 strategies. Even in a bearish market and bullish market, you have different strategies here. You can read on them, and like there are examples given here. So here, how the trade is made, what is the break-even point, what is the profit, maximum loss, what are the advantage, disadvantage, you can read here. You can check here the option diagram as well. So yeah, this site is useful if you want to understand the different market conditions, volatile market conditions, where the price will go up and down very fast. Bearish market completely going down, bullish markets trending upside, and oscillate means sideways market. So you can learn from this side as well in more detail, and do understand that there are risks associated with option trading, and you can lose your entire premium, or even you can lose more if you are doing the selling, or if there is some volatile spike in the options price, then also there will be like you can face huge loss as well. So do understand these risks, and before trading, be careful on reading different strategies. You can also change it, limited risk, unlimited risk, or both here. So yeah, that's all on this video. Hope you like the analysis. Do let me know in the comments how whether this video was helpful for you, and keep adding the comments, adding the likes, because that will keep us motivated to bring such quality content to you. Thanks for watching. Bye bye.